All right, let's look ahead to PCE. Let's look at the estimate for 2.7% rise year over year. We're talking about core PCE. Remember, PCE is the Fed's preferred inflation gauge. If it comes in line, what does that mean for the Fed if we get that 2.7 that represents a slight tick up?
Yeah, we are expecting that 2.7%. I think that's where consensus is also. It was actually interesting, though, to hear from Chair Powell last week. The Fed actually thinks that this February core inflation reading will be at 2.8%. So if we do get the consensus 2.7, that's actually a bit better than what Fed officials have maybe been penciling in. Now, none of this core PCE inflation reading is usually a surprise. We know most of it already from the CPI and the PPI data. And we did see that stickiness to inflation to start the year. That's not necessarily so surprising. We saw that in January and February last year. The big question is, as we're getting into the spring and summer, how much do those tariffs now start to show up?
Another question I have for you. I was talking to a few traders the other day just about the PCE report and the implications. Is the idea of a hotter than expected PCE report already priced in? I mean, we already know that tariffs are boosting prices when it comes to goods. Isn't that already priced in, or would a hotter than expected read, if we're over that 2.7, does that send a shock to the market in your mind?
Yeah, there might be a bit of that surprise in that is possible, right? The Fed thinks actually it's going to be 2.8%, so a bit stronger. But yeah, we are expecting to see the stickiness in inflation to start the year. People are expecting to see the increase in goods prices from tariffs as we're getting to the spring and summer.
But
That's
Veronica,
really been the
is it a
narrative.
market mover
Yeah.
though? A hotter than expected, is that a market mover at this point? I mean, can't we kind of factor in the idea that tariffs are making prices higher and maybe nobody has a great read on it? Because certainly when we talk or hear from CEOs, they say it's just really hard to figure this all out.
Yeah, it definitely is. And I don't think we're necessarily seeing that tariff impact in this February data just yet. So it maybe could be a market mover, right? If you're going into this period where we're expecting to see tariff inflation and inflation is already a bit stronger before we get there, then yeah, that could be important. But I think people are really expecting to see that stickiness of inflation this year. And maybe what we're not expecting is some softer economic data, softer labor market data. That's what we are expecting to see as we're getting, in the next coming months. But that might be the bigger driver as we see some of that weaker economic data.